In terms of our asset selection process, I think it's fair to say that no one has gone to the lengths that we've gone to identify things that tell you whether or not a wine is going to appreciate as much as we have. So we've looked at hundreds of different variables and back-tested hundreds of different variables. We know for a fact that certain things that we were told are best practice for fine wine investment, in reality, aren't predictive in general of future returns, or at least aren't predictive today. So at some point in the past, they might have been the correct way to invest in fine wine. But one thing any good data scientist knows, or any good quantitative analyst knows, is that nothing or very few things are true to the same extent throughout all of time. So while at some point, a good example of this, investing in high scoring Bordeaux vintages would have been a strong investment case, and it probably still is over a long 15, 20 year investment period. These days, if you use that as your investment rule, you would have lost a lot of money, because the châteaux are releasing vintages at higher prices, and they can justify higher prices when they get higher critic scores. So you actually see an inverse relationship in some cases between higher scoring wine and the appreciation over, say, a 4 to 7 year hold period. Another example might be buying Bordeaux on release. So buy the wines young. As they reach their drinking window, more people will buy it, and between that period of you purchasing it and them drinking, or that's another thing we've seen that isn't necessarily a hard and fast rule, and certainly on average isn't going to give you improved returns versus the market. We use our modeling to rank all of our wines from 0 to 100 in terms of their likelihood to outperform the market. And then from the higher ranked wines, we use an experienced eye in the form of our investment committee, looks at the highest recommended wines and selects those that fit with the composition of the portfolio we're building. Our portfolios, our syndicate collections, will tend to be diversified, but around some kind of theme. And within that theme, we'll look to diversify across things like price ranges of wines, different sizes of bottles and different pack sizes, and as well in some cases across different regions. And the idea behind that is you get a diversified portfolio that captures, if in the next 4 to 7 years more expensive wines appreciate and less expensive wines underperform, you're balancing your risk in terms of diversification across different strata of wines.